The best type of home loan for bad credit. So right now, a lot of people are in a position of where they think they have bad or not so good credit. That could be one thing that could be hindering them from applying for a mortgage or purchasing a home. However, what we have to understand is that you don't need a 700 credit score to purchase a home, as well as not having, 20% down. In terms of what your credit looks like or having bad credit, there are some loans that you can get that you can have not so perfect credit, have some credit challenges, and still have the ability to purchase a home. We're going to discuss that in this video, so definitely take notes as to what you may need to do to qualify for a mortgage. And of course, we'll have our link below for you to reach out to me, and definitely stay to the end to get some more tips on how to become a homeowner with not so good credit, as well as being able to do a few things to clean up your credit in the process. So let's get into it. So there's a loan called FHA, Federal Housing Administration. FHA is one of the more lenient programs that allow for you to have credit mishaps, not so good credit issues, and also still have the ability to purchase a home. With a 580 credit score, FHA will allow for you to put 3.5% down if you have a 580 credit score or better. If you have a 579 down to a 500 credit score, yes, a 500 credit score. If you have down to a 500 credit score, FHA will allow for you to purchase a home if you have 10% down as a down payment. So, 500 credit score to 579 is not the greatest. However, if you have the money to put down 10% of a $200,000 house is a $20,000 down payment, along with, your closing costs, you do have the ability to get into a home with a 10% down payment. You bring your own closing costs. However, you do own the home. Your credit may not be so good, but while you're in the process of purchasing the home, you could be improving on your credit and your credit scores. With a 580 credit score and 3.5% down, FHA it offers a little better terms. Okay, your credit score is a little higher than the 579, even though it might be just 1 point in the 580, but we will allow for you to purchase a home. What you do have to understand is FHA does not want the house back. So they're not going to allow for you to maximize your spending power with a 500 to a 580 credit score. And in some instances, going up to 640, it doesn't allow for you to spend all of your purchasing power with your income. They kind of tier the system, right? If you're here and you have limited assets, but you meet the minimum required guidelines for an FHA loan, we will lend you money. Most of the time, it may be something called a manual underwrite. A manual underwrite is where it's manually underwritten, and there is a few additional steps that you need to take in terms of purchasing the home. One of the biggest things that we do with a manual underwrite is we get a 12-month rental verification history from your landlord. That is sent from a third party who verifies with your landlord that you have not had any 30-day lates within the last 12 months. Remember, any 30-day lates within the last 12 months, that if that comes back clean and we're good, that's pretty much essentially the manual underwrite. Manual underwrites have something called compensating factors. They also have a tiered system. So when I say a tiered system, they may allow for you to use 40% of your income for debt to income ratio, and you have one compensating factor, which may be, they may allow for you to have, 3 months reserves, not 1 month. What reserves are equivalent to 1 month of the PITI, principal, interest, taxes, and insurance. If your total mortgage payment is $1,500 and you need 3 months of reserves, then that means you need to have at least $4,500 additional dollars available to you after the down payment and the closing cost is paid, whether it comes from you or it comes from a gift or it comes from the seller paying the closing costs. The other thing you want to take in consideration, reserves can be from your 401k, some type of investment. So it doesn't always have to physically be in your banking account. It doesn't have to be in your checking or savings or money market account, but it does need to be liquid. You should be able to be liquid, meaning you can pull money from your 401k. You can pull money from your IRA. You can pull money from your stocks. They can be considered reserves when you're purchasing a home. Now, the other thing is you want to make sure that when you do have lower credit scores, and all credit is not the same, there's different scenarios of a 580 credit score. There's a 580 credit score where the borrower does not pay their bills or they have a ton of late payments. And then there's a 580 credit score where the borrower had a mishap and they haven't utilized their credit or used their credit in a period of time. So they have a 580 or lower credit score. So those are two different scenarios. You also want to make sure that it's timing, right? Even if you have bad credit and you have lates on your credit, they only allow for a certain amount of late payments within a specific period of time. So typically they don't want to see more than 1 or 2 late payments in a 12-month period of time. And you also can't have more than 1 60-day late in the course of 24 months. So even though you may have the physical 3-digit credit score, you still need to have the credit profile in order to purchase a home and to get it with bad credit. Are you in the process of purchasing a home or wanting to purchase a home and it's a lot of information and you need somewhere to keep your notes? Well, I've put together a home buyer's journal to help you journal your journey to home ownership. By using this journal right here, it allows for you to take notes on your budget, what needs to be paid, things that you need to take care of in your credit. It also has budget worksheets, notes inside, as well as it allows for you to take notes on when you're selecting your real estate agent, your lender, and the different homes you're going to view. And at the end of the process, it allows for you to have a safe place to put the number to your HOA, when the roof was replaced, who the utility companies are, and their phone numbers. For $19.99, this could be yours. The link will be below so you can purchase it. Act fast, they won't last long. The second program that will allow for you to purchase a home with bad credit is the VA loan. The VA loan is for veterans who are eligible for a certificate of eligibility that will allow for them to purchase a home with a 0% down payment. Yes, VA loans will allow for you to purchase with a 0% down payment. Now, something that you want to definitely take in consideration, the VA loan technically doesn't have a credit score requirement. Most lenders do have credit score requirements just because they have a certain appetite for what they're looking for in terms of a borrower and whether they want to get that property back or if a person gets foreclosed on, right? So VA loans can go down to as low as a 500. 500 VA loan has the same requirement as a 600 or 650 VA loan in terms of a down payment. That's a 0% as long as you have the right amount of entitlement available to you on your VA loan. That information will come from your certificate of eligibility, which if you're a veteran, this is what we need. If you are a veteran and you, of course, you're separated from the military, then you have to get something called the DD-214, which is your separation paperwork. If you're currently active duty in the military, then we need something called your service orders. Your service orders will allow for us to have your orders, and we know exactly what we're looking for in terms of having your eligibility for your VA loan. Now, the VA also allows for you to have a manual underwrite, and a manual underwrite is similar to the FHA one we explained earlier. It's manually underwritten, which means you don't get a desktop approval. However, there are a few additional steps that we take in order to underwrite your file and get it approved through underwriting. With a VA loan, we do have to get a 12 or 24-month verification of rent history showing that you have not been late on your rent in the last 12 to 24 months. You also have to have something called residual income, What residual income is you have to have money left over after you pay all of your bills. The VA residual income varies from region to region. The Southeast region's residual income requirement is going to be different than the Northeast or the Southwest. So definitely, take that in consideration. And with the VA loan, it is a 0% down payment. No credit score technically required. So let me clear that up. If you have a credit score, they have to utilize your credit score, but you can have a 500, 580 credit score and get approved for a VA loan with 0% down. The seller can contribute to your closing costs, and you need to make sure you don't have any 30-day lates in the last 12 months and no more than 2 30 or 60-day lates in the last 24 months in order to qualify for a loan. So, in terms of having bad credit and being able to purchase a home, if you have the money for down payment for FHA, you definitely can qualify. VA loan, there's no requirement for down payment. However, you need to be able to have your closing costs if the seller is not willing to help you contribute. And with both of these programs, sometimes they qualify for down payment assistance or some type of first-time home buyers assistance programs. But I do want to preference with these scores that you have that are sub 600, 620 credit scores in their manual underwrites, you most likely will not be able to get any type of down payment assistance. So if you have bad credit, you definitely need to have your own funds in order to qualify for a mortgage. You can qualify for a mortgage with bad credit. I asked you to stay to the end because we're going to give you a few things that you can do to help clean up your credit and improve your credit score. The first thing you want to do is to take a look at your credit. You want to go to annualcreditreport.com, pull a copy of your credit so you can take a physical look at it. I would even say print it off. Print off your credit report to make sure everything is on there that is accurate and true and those items belong to you. The first thing I would definitely look at is to see if you have any medical bills. If you have medical bills, this is one of the easiest things to do and to get removed from your credit. I am not a credit repair specialist. I do not play one on TV or YouTube. However, from experience, I've seen people get medical collections removed from their credit. One thing you want to do is potentially do a pay for deletion on that medical collection. So let's say you have a medical collection of $200. You want to call the medical servicer, the person servicing that debt, and ask them, hey, if I pay off this XYZ bill for $200, will you delete it from my credit report? Make sure you ask specifically for that when you're making the call. That way we know we can get it deleted. If they say yes, that's when you make the payment as well. And then within 30 to 45 days, they say they will update it in the system, and they will also provide you with a letter saying that they're going to get it removed. That typically does not work if you settle for less than what you owe on that debt. But if you pay it in full, it is possible to get a pay for deletion and to have it removed from your credit. And this will typically help boost your credit score over time, sometimes immediately. The second tip is if you have credit card debt and your credit utilization is higher than 30%, you want to try to do your best to pay down your bill below 30%. Optimally, you want to pay it down to 10%. Let's take an example of if you have $1,000 credit limit, you want to make sure your balance is between $300 to $100, and you want to make sure you keep it there over a period of time. That way you are not fluctuating your credit score because you're constantly charging and paying it off. Even though you pay it on time, it does help your credits in terms of you making on-time payments, but the fluctuation in your balances does hinder your ability to score more on your credit report. If you found this video helpful, please do me a huge favor and share it out to 3 people. If you're new to the channel, hit the subscribe button. If you have any questions or comments, please drop them below. We do answer them. Thank you and have a great day.